Let me quickly take our viewers through what HDFC Bank's Quarter 1 earning is looking like. The country's largest private sector bank today reported net profit of 11,951 crores, jumping from 9,196 crores in the corresponding quarter last year. The bank's April-June financial year 24 quarter net income stood at 57,816 crores compared to 41,560 crores last year. What is your understanding, Kranti, of how bank has of course beaten street estimates? The earnings are better than expected. What has helped HDFC Bank in gaining momentum that it did in the first quarter?
Shweta, these are extremely good set of numbers, both standalone as well as the consolidated basis. What caused the bank results to be in a positive territory? It shows the underlying strength of the economy. But what we need to point to understand during this quarter is HDFC Bank right now it's the results of the combined entity, the merged entity between the HDFC Bank as well as the NBFC, HDFC Limited. The results are the combined entity. So they got HDFC Bank now, right now, listed today. It stands as a standalone entity, as a combined bank together with a market cap more than 15 lakhs crores. And HDFC now emerged one of the largest lender in the world. It is right now, as per the numbers available, it is the 7th largest lender in the world. It's a proud moment for all the Indian investors and Indians. One of the banks from India stands tall in the global rankings of the the of the global lenders are concerned. So and these numbers are right now with the merged entity. Going ahead, what we can expect, given the kind of momentum in the economy, we can expect some more further decent set of numbers. The same kind of momentum can be continued with respect to HDFC Bank is concerned. The net interest margins also, as a standalone basis, it's up by 21%. They came up with 23,599 crores. So all the set of numbers, the underlying strength in the economy is truly reflecting in HDFC Bank numbers.
All right, the underlying strength of the economy, Kranti says, is looking good, and it's appearing in the numbers that we're looking at as far as HDFC Bank results is concerned, and also overall the bank nifty and the private bank nifty and the gains made by both of them in the stock market today. I also want to understand from you, Kranti, what are the big cues to look out for at this point in time? What should investors be looking out for as far as the big global cues and domestic cues is concerned?
Absolutely, Shweta. At this point of time, investors need to take into consideration how the Federal Reserve movements are going to be. One of the key thing is there are mixed reactions that are coming from Federal Reserve commentary. One hand, what we are expecting is there is a pause of interest rate hike from the Federal Reserve. The other hand, what we are getting a mixed commentary is the Federal Reserve can increase the interest rates further. So if Federal Reserve is going to increase the interest rates further, that's going to have a definite impact on the global equity markets going ahead. And coming back to India, what we need to see is currently the inflation is inching up higher. We can see the increase of prices of vegetables and other things right now, which is causing a worry for the investors in the medium to short term. But what we expect is the inflation is going to cool down in India. But everything, what we need to wait and watch, the rising in inflation and the stability in inflation. We need to see how RBI is going to take a stance with respect to interest rates in the upcoming RBI monetary policy, which is scheduled in the month of August. So that is extremely crucial how RBI stands on inflation and how they are going to gauge the interest rates going further. And we are already in the earnings season. How the first quarter earnings season that's going to pan out. These are the two things investors need to keep on their radar to gauge the market movement.
All right. And as far as inflation is concerned, from what we understand, the preliminary sort of information coming in by the way of how headline inflation has been in the month of June and the inflation numbers, the everyday news, of course, of how inflation is at an all-time high for easy consumable products from your dals to your fruits and vegetables, all of them is not looking good. And this is, of course, just the preliminary sort of data that we have. We are literally in the mid of July, and this all could have an impact overall on inflation numbers going forward.
Yeah, definitely, Shweta. Right now we have very unusual rains, so that have been causing the rise in uh, pulses, the rise in prices of vegetables. So, how much the impact it's whether it's going to continue in the next coming couple of months or it's going to cool down further, it is completely premature to say right now. We need to wait and watch for some more weeks to know the information because this unusual problem of supply demand with respect to the vegetable agriculture products are concerned that has been there in India. If you have to see few months back, uh, the farmers have been throwing their tomatoes on the road. Right now, see the same tomatoes are turned as a red gold. So this unusual thing is there in the price moment, erratic price moments in India always.
All right. And as far as corporate results is concerned, you've got a TCS, HCL, major tech companies. Their results have been more or less in line with estimates, not a big dampener and not something that could bring cheers. But overall, that did not really impact the market sentiments. How do you see the earnings season panning out so far, and what are your big expectations?
Yeah, Shweta, you absolutely said. We started with the earnings season with TCS, decent set of numbers, but market not pursued them as negative. The reason is the stock valuations looks attractive as there is a liquidity that's have been coming from foreign portfolio investors. So the domestic institutional investors also they're taking some part of their portfolio, they're allocating in a staggered manner towards the IT stocks at this point of time because these stocks are businesses and business models are quite strong. So, despite of uh, inflation, recession worries, investors could able to take on a longer term perspective in IT stocks at this point of time. Coming to the the other sectors like capital goods, they are going to post a decent set of numbers. What we witnessed is we witnessed some kind of price reduction and decrease in the prices of raw material prices, which is going to create some kind of improvement in the margin in the previous quarters. We can expect decent set of numbers from autos as the numbers have been decent, and the auto ancillary sector they are also going to post very good results. And the banking and financial services, we started with HDFC Bank with a very good set of numbers. The same can we can expect with the banking and financial services. So by and large, most of the sectors are going to post a good set of numbers, but we need to see how the results of infrastructure companies and the cement companies. Those are the neutral expectations we have, and also the metals also have a neutral set of numbers this time. By and large, it's going to be a decent earning quarter. That's what we have been expecting from the current earning season.
Okay, decent earning quarter is expected. Kranti, BFSI, realty, auto, what other sectors are we looking out for?
Yeah, these are the sectors. What you mentioned is that these sectors are going to post a very good quarter-on-quarter results. The banking and financial services and the capital goods and defense, one of the
Right.
sector that has been buzzing. Like what we witnessed is stocks like these are not the stock recommendations, just to track
Absolutely.
for the investor perspective, like stocks like Mazagon Dockyard, Hindustan Aeronautics. These are the stocks have been showing a big momentum with respect to their stock prices are concerned. So we need to wait and watch how these stocks earnings are going to pan out in the coming in the current quarter.
I also want to understand from you, you said defense sector is likely to perform better, and this, of course, comes on the back of Prime Minister going to the US, but we also have Janet Yellen, who's the Treasury Secretary, visiting India, her third visit in 9 months. And she's, of course, meeting the G20 finance ministers. How's that likely to impact the market, if at all?
Yeah, all these events, the G20 event is bringing in, drawing the attention of institutional investors and the foreign portfolio investors looking forward what's happening in India. So all these commentaries and the kind of exuberance and the kind of resilience the Indian economy is showing and the kind of commentary that is what we are receiving on regular basis from the G20 delegates also helping, and this has been showcasing the India's core strength to the foreign investors. That's the reason right now many of the foreign investors want to take the pie in India's growth story. These kind of events also helping the markets to demonstrate India's underlying story to the global investors.
All right. Amit Gupta has also joined us from FinTech Capital. Amit, appreciate you taking time out. Good afternoon to you. We were discussing the big sectors to look out for that would be driving growth in the Indian markets. And one of the key areas and points that we were discussing at this point in time was Janet Yellen's visit to India and a tighter partnership with the US and how that could impact certain sectors like BFSI, IT, so on and so forth. What are your big expectations, Amit?
So hi, thank you for having me. So I believe these kind of visits are more crucial from a relationship point of view, given the geopolitical volatility which we have seen over the past few years. And as we have also seen in the recent visits, whether it was to the US or to the France, there is a lot of partnerships building in various sectors. So one of the beneficiaries which we saw from the US visit was in the defense sector. Also, when the visit was to the France, and what we are seeing is more and more people, more and more companies are willing to commit to India. So whether it is in the semiconductor space, whether it is in the chip making, we are seeing more companies coming to it. Obviously, it's not going to happen overnight. Tesla is also among the headlines to come into place. But the sectors where it has already happened, like in the semiconductors or the phone making space, I think those are the sectors where stock market investors should look to sort of build a positions or to invest fresh into it.
All right. Specifically on HDFC Bank stock, the stock is up as much as 2% at the end of the close of this market day on Dalal Street after the Q1 results, which were better than expected, at some would say beating many estimates. Where is the stock headed now after the merger for the merged entity?
So look, I think, as far as the result was concerned, I think it was pretty much on expectation. There were few one-offs, which I believe, was due to the merger happening. We have to also understand that HDFC Bank did not have the mortgage. They had 2-year, 3-year mortgage. But now with HDFC coming into HDFC Bank and this merger is going on, now the loan book, it will become even more stronger. And the HDFC Bank will be in the level footing with other banks in the country, where the loan book growth is very much accelerating, like ICICI Bank. So my sense is there is obviously a lumpiness because of the liabilities which have gone up because of the merger, and those are coming in one-offs. But eventually the HDFC Bank is becoming one of the largest banks in the world, not just in India. And as far as the mortgage business is concerned, it is now at a level footing with other banks. So I'm quite positive on the stock, and technically also I think we are going to see a lot of inflows coming into the sectors because of this merger. Now the FI headroom has gone up almost 13-14%. So we'll see a lot of inflows coming in the next few months into this stock. If India's allocation goes up, or if any FI wants to invest into India, HDFC Bank being the #1 bank now, and among the top 10 banks in the world, HDFC Bank will definitely find a place in the portfolio of many of the FIs.
All right, and we were just discussing what are the major global and domestic cues to look out for in the market this week. What are your suggestions?
So I think one of the things will be this Reliance demerger, which is going to take place into the markets. I think the 20th is the last trading day, and 21st is the X date when it gets split because of the Reliance Jio financial listing, which is going to happen probably 2-3 months down the line. So I think that's a big one. Reliance is also declaring results, on 21st. So I think in short term, the market would be, mostly guided by the earnings. I don't see too much of data which is coming into this week. FOMC is obviously next week. So that will be one key factor to look at, because FOMC is expected to raise rates, and this is a blackout period, so we will not see many of the FOMC members speaking about it. But I think the expectation is pretty much priced into the markets of having a 25 basis point rate hike. So I think earnings will guide most of the stock market action this week.
All right, and before I come to you more for earnings, let me quickly also apprise our viewers at this point. Among individual stocks, SBI was the top gainer in Nifty today, rising as much as 2.86%. Dr. Reddy's, Wipro, Grasim and HDFC Bank were among other major gainers. On the other side, ONGC was the top loser, falling 1.68%. Hero MotoCorp, Tata Motors also lost more than 1%. On the sector specifically, what sectors do you see driving market and growth in days to come, Amit? What sectors are you most positive about as far as earnings seasons is concerned?
Yeah, I think financials will continue to be an important part of the market structure at this point of time. We are going through a phase where the asset quality is, under control. The growth is coming back in the credit growth. A lot of the sectors are showing, very promise of expansion, especially these PLI schemes-led sectors. So I think financials has to be, one of the parts of the market which is continuing to do well. I'm also interested in non-lending financials, especially the insurance space, life insurance in particular, where I feel there is the pain of the last 2-3 years is now done, and we can see, growth going forward. Obviously, some regulatory changes will also help. Apart from that, microfinance sectors has been on our radar for quite some time, almost now 12 months, and we do have positions recommended to subscribers on that. And they are coming, almost for the next 2-3 years. Almost every microfinances is committing almost 25%, 25 to 30% growth. That would mean 2 to 3x on the books. 2 to 3x change in the books. So that is the 2-3 sectors: lending, financials, life insurance, and microfinance, where we are most interested in. This is going in with the trend. As far as the contra bets are concerned, we are looking to initiate some positions in the rural theme, where whether it is agrochemicals or whether it is dairy sector, these kind of contra bets we are taking, where valuations are at almost 2-3 years lows, and creating positions would probably take 3-4 months time, but that could do well going forward in FY25.
All right. Globally, and I'm looking at data and figures that is coming up, most European and some Asian markets are also slipping up after data that shows the Chinese economy is in fact growing a lot more slower than it was expected, and market of course seems to be getting impatient. Is that likely to have any impact on India at all?
So no, slowing China would mean that global growth is slowing, because China is such a big part of it. But I think at some point of time, all of the Chinese slow growth will get priced into the markets. I don't think the China will see major inflows in the next 5 to 7 years, because of whatever is happening politically, whatever has happened politically rather. And because of that, people will adjust their portfolios in the markets, getting out of China on every rally and finding pockets or in other emerging markets like India itself to invest. So my sense is that uh, I would like to keep away from the sectors which are very China dependent, like commodities and metals, etc. And some portion of chemical sector also. But we can easily build a portfolio which is not so much dependent on the Chinese growth. And there are enough opportunities according to that. So I'm not so much worried about China getting slowed, even though at a global level it will definitely have an impact.
All right. Kranti, I want to take the same question to you. Any impact of slowdown in Chinese growth for India? Is it a cause of joy or a worry?
It's completely neutral with respect to the stock markets are concerned. One thing is, if there is a slowdown on China, uh, of course, it resembles there is a slowdown in the global economy as China derives most of their revenues from their exports. But the good thing to ponder for India is if there is a slowdown in China, the metal prices, because we want to improve the uh, domestic production in India, which is going to create a headroom for the Indian consumers and Indian producers with respect to the raw materials are concerned. But overall, it's going to have a neutral impact for the Indian economy and Indian markets. But if there is a slowdown in China, we can see some kind of the emerging market flows that can be diverted towards the Indian economy, given the kind of the growth nature of India, and also because since we are the fastest growing economy right now, and also India is emerging as the manufacturing hub, the Atmanirbhar Bharat, and many of the developments that are taking place uh, with respect to the chips or any kind of manufacturing is concerned. India is going to attract a lot of FDI, which is foreign direct investment, as well as foreign portfolio investor flows in India. So we need to carefully watch how the things are going to be. One thing is uh, we need to also look the uh, 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 the valuations of Indian economy with respect to valuations of the Indian market with respect to the vis-a-vis the relative emerging market space also. These are the factors one need to keenly observe over a period of time.
Okay, valuation of Indian economy, Indian markets. I also want to quickly understand from the two of you before I let you go. People who've been watching very, very keenly the rally, the bulls run in the markets, hoping and looking to book profit. Will there be a correction anytime soon? Amit, to you first.
So I think just the way the structure is currently placed into the market. So a couple of weeks ago, I was also on your channel, and I said that it's still very early days in the bull market. At that point of time, we were almost at 18,700 or sort of levels. And my sense is that the this big breakout which happened above 18,800, 900 kind of levels, at least on Nifty, this would mean that the rally would continue. Obviously, there are very heated parts of the markets where I would not like to create any kind of fresh positions. But I think overall, this rally could, continue. We are almost like 19x on FY25 earnings, which would mean we are not very cheap, but we are not very ultra expensive also. And given the fact that these two mergers are happening, we are going to see a lot of inflows happening in HDFC Bank and Reliance, which are the big heavyweights of Nifty. On top of that, IT, I think, was pretty much oversold into the market given the downgrade which happened for the various brokerages. So I think if IT, HDFC Bank, and Reliance, these three contribute, then this Nifty rally can even touch 20,000 or even go further than that. So my sense is that one needs to pay a little bit cautious about what valuations you are paying while buying any stock fresh. But apart from that, my sense is that when valuations have run up and the participation is not up to the mark, then the corrections usually take some time and test a lot of patience, suck in more people into the markets. And then only, we might get a correction. But I don't see a correction in the short term. I mean, I'm not talking about a 3% kind of a correction. I'm talking about like a 10% type of correction. So my sense is it's going to be more like 3% of a correction in short term, unless we get a surprise. Yeah.
All right, Kranti, before I let you go, would you like to weigh in on that? What sort of correction are you looking at?
Shweta, this rally have more legs going ahead, but we can expect some kind of consolidation in the market rather than a correction. But we don't know how the geopolitical things that will change overnight, which are beyond one's control. But Shweta, definitely I can watch for one thing is any correction on Indian markets. It's a very good opportunity for the investors to accumulate stocks for a longer term basis. It's going to be a very good opportunities, and Indian markets time and again they have proven that they are resilient and resurgent markets. So any correction, okay, that's a very good opportunity for the investors, and Indian market definitely is a market to buy on every dip.
All right, gentlemen, appreciate you both joining in with your expert opinion.